SFX distant city hum, a subway rolling beneath, footsteps on wet pavement. Narrator: what if $1 million home in New York suddenly lost 20% of its value in 2 years? Not just a blip, an air pocket. A drop so fast it leaves even the most seasoned agents breathless. SFX newspaper rustle, a keyboard click, an elevator ding. Narrator: on paper the city looks invincible. The median listing price just crossed $1 million, a citywide average once unthinkable. Brooklyn, Queens, even the outer stretches all climbed since the pandemic. The rest of the country cooled. New York kept climbing, but the higher we go, the thinner the air. SFX soft metronome tick. Mortgage calculator taps. Narrator: affordability has never been worse. Mortgage rates, once under 4%, now sit between 6.4 and 7. The same home, the same walls, double the monthly payment. Wages, barely moved. More buyers turned away at the door, denied by debt-to-income limits designed to protect them from themselves. In some neighborhoods, the math simply doesn't work anymore. For a median-priced home, the monthly bite now swallows more than 60% of take-home pay, nearly double what it took 5 years ago. SFX: a phone vibrates. Silence. Narrator: fear has changed shape. We used to fear missing out, now we fear getting stuck. SFX: door creak, a quiet brownstone block. Narrator: Crown Heights, early spring. A school principal lists her brownstone at $1.2 million. Right on the numbers. Week 1. Silence. Week 6. A single couple walks through. No follow-up. By day 90 a choice: pull the listing or cut the price. She drops $75,000. Still, nothing. In 2021, this would have sparked a bidding war. In 2025, it's a pause. Not a crash. A stall. SFX: clock wind. A slow breath. Narrator: across the city the standoff spreads. Phantom listings, homes quietly withdrawn when sellers won't budge. Buyers running the numbers and walking away. The affordability index flashing red, the worst reading in decades. Everyone waiting for a sign. SFX: pages flipping. Broker chatter fades in and out. Narrator: beneath the headlines. 3 cracks deepen. SFX: a faint glass hairline crack. Narrator: first the buyers. High rates have redrawn the map of who can own here. In 2025, denial rates on mortgage applications hit their highest level in more than 10 years, over a third turned away. The home ownership rate sits under 32%, far below the national average. The ladder is still there, but the rungs have moved farther apart. And even those who qualify face payments that eat their lives. The cost of money is the cost of opportunity, and right now it's too high. SFX: a stamp, denied. A door latch clicks. Narrator: second. The demand that used to float the top of the market, global money and corporate relocations, has thinned. Chinese buyers spent about $1.2 billion in 2018. By 2023, less than $600 million. International buyers once made up 15% of Manhattan deals. Now it's closer to 7%. Capital controls, sanctions, scrutiny. The pipeline constricted. Corporate relocations, down almost a third since 2019. Hybrid work rewired the city. Fewer executives need a permanent address in Midtown. Office towers half full. Corporate leases turning over. The luxury segment, the market's pressure valve, now absorbs less pressure. SFX: an airplane fades. Office lights click off one by one. Narrator: third. Supply that isn't visible, but is very real. Sponsor-held inventory. Unsold units. Shadow rentals. In early 2025, developers still held thousands of condos citywide. Some towers renting 10 to 20% of units, waiting. In the past these would have been snapped up. Today they linger. Paused projects, like the new skyscraper planned for 52 Fifth Avenue, put on ice, citing costs and a thin buyer pool. The cranes slowed, the filings cooled, and lenders took note. SFX: construction halts. A crane groans to a stop. Narrator: because another clock is ticking. Loans taken out in the 2022 boom come due in 2026 and 2020. Bridge loans, construction loans. Lenders now want faster sell-through or principal paydowns. Projects still below 60% sold after 2 years. They face hard choices: bulk sales, price cuts, or forced listings. If rates stay high and buyers stay scarce, that shadow inventory becomes a shadow no more. A sudden flood, just as demand dries. SFX: a wave hits a seawall and recedes. Narrator: and there's one more fuse, the invisible kind that runs under 1,000 front doors. Adjustable rate mortgages written in the frenzy. In 2026, they reset. Payments jump 30 to 50% in a single year. In Astoria, Forest Hills, Bay Ridge, owners who stretch now feel the walls closing in. A small landlord in Queens, refinanced at a teaser rate in 2020. In 2026, his monthly nut spikes from 7.2 to 10.5. Rent stabilization caps his income. His costs don't care. Some will raise rents, some will sell, some won't make it. SFX: mail slot. An envelope slides through. A chair scrapes. Narrated. Meanwhile, New York's safety nets fray. The 421 tax abatement for rental construction expired in 2020. Permits for new rentals fell 78% the following year. Developers are racing to finish projects grandfathered under the old rules. After that, a construction cliff, fewer rentals, fewer affordable units, more pressure on what's left. SFX, a pen stops. Silence. Narrator. So how could prices fall 20%? It wouldn't happen all at once. It would happen one decision at a time. One price cut, one withdrawn listing, one forced sale. Inventory would rise where demand is weakest. New luxury condos in Midtown, sponsor units in the outer neighborhoods heavy with resets. Buyers would wait for the bottom, and in waiting help create it. SFX, a slow inhale. A subway passes. Narrator, not everyone is exposed. The city still has buffers. Scarcity is real, land is limited, zoning is strict, and building is hard. That's a brake, not a gas pedal. And decades of tighter lending mean most owners have equity, solid equity. More than 60% of homeowners hold at least 30%. Equity turns a forced sale into a refusal to sell. That matters. SFX, a front door deadbolt clicks, a key turns secure. Narrator, if this were only a New York story, we could stop here. But the map shows a wider pattern. SFX, a map unfolds, a highway hum. Narrator, Texas, the real estate giant of the South. In 2025, it's bleeding yellow. Median prices are down about 3.2% year over year. Around $331,000 more than $70,000 below the U.S. median. Austin leads the declines at -6.4. Dallas down 4.1. San Antonio -3.5. Houston -2.8. Inventory surged 30.7%, over 132,000 active listings. Homes take about 105 days to close. SFX crickets at dusk. A for sale sign creaks. Narrator, the was white hot, from 2020 to 2022. Cheap land, low taxes, Tesla, new rooftops across the horizon. Then 2024 arrived. Supply doubled. Rate hikes pulled the ladder up. By 2025, the psychology flipped. No bidding wars, sellers buying down rates, concessions on closing costs. Not a crash, more like a repricing. Affordability became the ceiling. A 3% mortgage on a 330 home used to be $1,400 a month. At 7%, $2,600, before insurance or taxes. Many buyers stepped back. SFX, a storm radar game. Insurance hold music. Narrator, insurance added ballast to the decline. Along the go across Houston, premiums jumped 20 to 40%, $200 to $300 more a month, just to be covered. Lenders ask for larger escrows. Some insurers pull back from flood zones altogether. A FEMA map shifts, and a neighborhood freezes overnight. Deals stop after a Fed comment. Storm warnings trigger insurer moratoriums. Micro freezes ripple through a fragile market. SFX, computer keys, a phone call ends. Narrator, yet Texas didn't overbuild like 2008. Jobs and population growth remain strong. Analysts call it a recalibration. Prices likely flat to slightly down until mid-2026, then a rebound if rates ease. The state's story isn't collapse, it's redistribution from overheated metros to balanced, mid-sized markets. The frenzy cooled, the market breathes. SFX, a long exhale, a porch swing creaks. Narrator, back in New York, the breathing is shallow. Zillow projects a modest slide, just over 1% through May 20. A soft landing on paper, but paper can't feel stress. Agents can. Days on market are stretching. Price cuts more common, especially at the top. Luxury towers once fueled by overseas money are sitting with unsold floors. Sponsor units rented out for cash flow, and the loans behind those glass or waking up in 2020. SFF, a calculated totals, a small metallic click. Narrator, here's what a 20% decline could look like. Mortgage rates stay stubbornly high into 2026, not punishingly higher, just not lower. Airing resets arrive in clusters, hitting specific neighborhoods. Payment shock forces listings. Lenders tighten on developers. Bulk say, emerge in Midtown the outbound. Bidings, foreign capital doesn't return in size. Corporate relocations remain muted. 421 lacks a replacement. The rental pipeline drains, while for sale supply spikes where it hurts most. Luxury that were never truly home. SFX, a drip in a quiet room, then another. Third. Narrator, not all at drip by drip. One tower discount drip comp. That comp nudges a broker price opinion. A buyer sees leverage and waits. Inventory inches up. Days on market stretch. Price discovery begins, with numbers that start to sting. SFX, a pen crossing out a number writing the lower one. Narrator, could New York resist? It's done it before. In 2008, the city fell less and recovered faster than many metros. In the early 90s, the pullback was real but uneven. Scarcity and equity are shields. They slow the fall. They soften the landing. but they don't make gravity disappear. SFX, a faint heartbeat, steady. Narrator, the real danger isn't a headline crash. It's the silent accumulation of strain. The school principal in Crown Heights, the landlord in Queens, the developer in Midtown, the couple in Astoria, who choose to rent a condo, rather than accept a loss, the family in Bay Ridge, who cut price twice, and still can't unlock the next step. Confidence erodes quietly, then all at once. SFX, a hallway echo, a building lobby door opens to the street. Narrator, there's a reason the city feels both expensive and fragile. The pillars that propelled the last surge, cheap money, global demand, urgency are fading. What remains are fundamental income rates, supply you can actually buy, and policies that either build bridges or pull them up. When affordability collapses and supply builds, New York has seen declines up to 20% before. It's rare. It's messy, but it happens. SFX rain begins. Cars hiss along a wet avenue. Narrator, if the trigger comes in 2026, it won't be a single moment. It will be a convergence. A rate that doesn't drop when hooked. A lender that won't extend. A wave of resets that hits an already anxious market. A few towers forced to clear inventory fast. A line of buyers who decide they can wait one more quarter. Momentum shifts, and in housing, momentum is everything. SFX, elevator doors close. Ascent. Narrator, but this city has another habit: resilience. Scarcity is stubborn. People still want to be here. Opportunity still condenses into these few square miles like rain into a storm drain. That's why the outcome may not be collapse, but a split. Luxury, new development, and oversupplied pockets take the brunt. Well located, scarce, lived-in homes hold better. The market redistributes risk, just like Texas, only vertically, floor by floor. SFX, a child laughs in a hallway. A neighbor says hello. Narrator, so what do you do if you're here? Watching, waiting. If you're buying, the math matters more than the mood. Price the payment, not the postcard. Build reserves. Negotiate everything: concessions, rate buydowns, closing credits. The best deal may be time. If you're selling, sell the reality, not the memory. Price to the market you have, not the one you loved. Your first price is your best chance. If you're building, don't count on speed. Count on solvency. Debt maturity is a calendar, not a suggestion. If you're renting, understand your leverage. Scarcity is coming to rentals, but not even. Know your submarket. Know your clock. SFX, the rain eases. A taxi splashes by. Narrator, forecasts say flat to slightly down. The data whispers something else. Stress gathers in the quiet corners first. That's where markets break or bend. SFX, a key drops into a bowl. Quiet kitchen. A kettle warms. Narrator, in the end, this isn't about towers or trend lines. It's about the moment the letter from the bank arrives. The day you choose to lower your price. The call your broker doesn't return, because there's nothing new to say. 1,000 small decisions, strung together, become a market. SFX, kettle whistles softly. It's turned off. Narrator, will New York's $1 million median bend or break? The truth is messier than a headline. The city may not fall all at once, but it doesn't have to. A slow drift downward can change lives just the same. SFX, a subway doors chime. Stand clear. Narrator, by 2026, we'll know whether patience paid, or whether the waiting was the very thing that pushed us over the edge. SFX, the train departs. The sound recedes. Silence lingers.